When most people hear the word trading, they immediately think of flickering candles, crypto wallets, and Wall Street chaos. But the concept of trading runs much deeper than a digital screen.
From the earliest days of human civilization, people have exchanged value. Before money, before markets, before charts, there was trade. Grain for livestock, oil for silver, goods for survival. Trading is not new. It is as old as humanity itself. At its core, trading is the exchange of value based on expectation. You trade today because you believe tomorrow will be different. Different prices, different demand, different supply. Trading is not gambling. It is decision-making under uncertainty, guided by information, timing, and discipline. In this video, we are breaking down the definition, the origin, and the evolution of trade to help you master the markets today. To find the earliest records of organized market foresight, we turn to a source many overlook in finance, the Bible. I know what you're thinking. Why the Bible? Because beyond faith, it is a collection of some of the oldest recorded historical documents in existence. Its records of commerce and economy are backed by archaeological excavations, the accounts of Roman historians, and physical landmarks we can still visit today. These aren't just stories, they are records of how the laws of economics governed the ancient world, long before the first textbook was ever written. Long before digital exchanges, there was market foresight. Take the story of Joseph in Egypt. He interpreted a dream as a macro forecast, 7 years of abundance followed by 7 years of famine. This wasn't just a miracle, it was strategic inventory management. By storing grain during the surplus and releasing it during the scarcity, he controlled the market. Today, we call this positioning ahead of the cycle. Centuries later, the prophet Elisha predicted a market sentiment reversal. During a deadly famine where prices were hyperinflated, he declared that within 24 hours, prices would collapse. He said, "Tomorrow about this time, a measure of fine flour shall be sold for a shekel." It happened exactly as spoken because of a sudden shift in supply. This is economics in its purest form. Supply increases, prices fall. Supply decreases, prices rise. These same laws govern the S&P 500 and Bitcoin today, just as they did the gates of Samaria. As civilization advanced, trading evolved from a simple necessity into a complex science. Across 5 key eras, the foundations of our modern economy were built. From the gates of Samaria to the markets of Rome, this is how the world learned to trade. Our journey begins in Mesopotamia. Here, the handshake deal was formalized into the world's first written records. Using cuneiform on clay tablets, the Sumerians invented formalized contracts. We see this reflected in the Bible when patriarchs like Abraham insisted on public, legal transactions for land, turning trust into a recorded legal certainty. In ancient Egypt, the focus shifted to logistics. To manage the wealth of the Nile, they refined centralized storage. This is the science Joseph used to save nations, standardizing weights and measures to ensure that grain could be stored and sold fairly. By creating a just weight and balance, Egypt brought predictability to the marketplace. In ancient Greece, trading entered the realm of the intellect. Philosophers like Aristotle began to study the ethics of profit. They questioned the true value of money, a concept later echoed in the New Testament, where the marketplace, or agora, became a place not just for coin, but for debating the moral cost of our transactions. The Roman Empire scaled these concepts to a global level.
They developed regulated markets and the world's first widespread banking systems. This was the world of the Roman denarius, where a single currency and a vast network of roads allowed trade to span across continents, creating the economic Pax Romana seen in the Gospels. Finally, the Silk Road created the first truly globalized economy. This era introduced cross-border currency exchange and speculation. It reminds us of Elisha's prophecy in Samaria that supply and demand could change in an instant. Merchants were no longer just trading goods, they were betting on the future value of a world now fully connected. From ancient grain stores to global financial markets, one truth remains unchanged. Markets are not machines, they are mirrors of human expectation. Every chart you see today carries the same forces that moved prices in Egypt, Samaria, Rome, and along the Silk Road: foresight, scarcity, abundance, fear, and discipline. Long before textbooks and trading terminals, these principles were already observed and recorded. In Scripture, we see leaders like Joseph storing grain ahead of famine, and prophets like Elisha declaring price changes before supply shifted, clear evidence that markets have always responded to information, timing, and expectation. Technology didn't create trading, it only revealed what has always been there. Those who understood supply before others survived famine. Those who understood timing prospered in uncertainty, and those who ignored risk paid the price. These are not just financial lessons, they are patterns written into history and preserved in the Bible as real-world accounts of decision-making under uncertainty. This is the legacy of trade. On this channel, we don't chase noise, we study structure. We learn cycles, and we train our minds to see markets clearly before the crowd does. If you're ready to trade with understanding instead of emotion, with patience instead of impulse, and with clarity instead of confusion, then this journey is just beginning. Welcome to the Mindset. I'll see you in the next video. Thanks for watching.